Welcome to Inside India. I'm Emily Tan, sitting in for Sri Jegarajah this week, and here are your headlines. Risk on in the market. Stocks are up and oil slumps after President Trump claims Israel and Iran have reached a ceasefire agreement, but Iran says no final decision has been made yet. Indian markets look set to follow the rest of the region higher, with the big tumble in oil prices helping. On the trade front, India chases deals with the U.S. and the EU, but hitting a wall in its search for better trade terms with ASEAN. 9 rounds of talks yielding little progress. And we are tracking gains across the Asian region today. This as we have a supposed ceasefire over in the Middle East. That's according to President Trump. We are waiting for Iran to confirm that. We were largely positive in the last hour. Just a couple spots of red creeping up here now. The New Zealand market's down 0.4%. The FTSE Bursa has been seeing a negative bias for most of this morning. But the standout really is coming through from North Asia. The Nikkei 225 better for 1%. The Kospi up 2.6%. The Hang Seng Index and the TAIEX also traded higher by more than 1%. The Indian markets come online in about 45 minutes, and here's what the Gift Nifty futures are indicating. We are tracking strength, better for 0.8%. We're looking at 25,265 for futures, tracking the Nifty 50 at 24,971, the point it's set to open today, as well as the rupee at 86.16 last done. U.S. President Trump has announced a ceasefire between Iran and Israel. In a post on Truth Social, Trump said it would take place in 2 phases, starting from midnight Eastern. That's 2 hours from now. But not everyone involved seems to agree with Trump. Dan Murphy has been following all the developments and joins us now from Dubai.
Ems, good morning to you. Well, we are seeing coming back to regional equity markets and oil prices falling here off the back of what has been a very dramatic last 10 hours here in the Middle East. President Donald Trump now saying Iran and Israel have agreed to a total ceasefire, but Iran's foreign minister has said that a final decision on a ceasefire will be made later. And this apparent de-escalation also coming just hours after we saw Iran launching what appears to have been a largely symbolic missile strike on the U.S. Al Udeid Air Base in Qatar. That's the largest American military installation in the region, supporting thousands of U.S. troops. This attack, of course, being carried out in retaliation for American strikes on Iranian nuclear sites over the weekend, and, of course, critically importantly here, resulted in no casualties. U.S. defense officials also say the majority of missiles that Iran lobbed at that Qatari base also were intercepted. So this really is a symbolic attack from Iran, one that is unlikely to result in a path of escalation. And that's why we've seen calm coming back to the markets and oil prices falling, as I said. President Donald Trump, shortly after, taking to his Truth social media account and dismissing the strike as very weak. Only hours later, he then announced that a ceasefire had been brokered, he claims, through direct talks led by himself and Vice President J.D. Vance, with Qatar playing a mediation role. Now, what's interesting, of course, is that we still don't have confirmation from the Iranians that they will indeed agree to this ceasefire. As well, we're also waiting for official confirmation from the Israelis. All of this at the moment is being put forward by the United States and by President Trump, who says this is a done deal. The Iranians, for now, at least saying not so fast, and there is no agreement. So we're watching and waiting to see where this leads. But across the region today, a sigh of relief on the suggestion that this puts the region, it puts the US, Israel and Iran on a path to what could potentially be de-escalation here.
Dan Murphy, thank you very much for bringing us the latest. We are keeping track, of course, the developments in the Middle East. To oil prices now, where they have come off their elevated levels. Of course, we're tracking the WTI crude, currently pulling back 2.4%, 66.87 last traded. Brent at 69.88. Prices have come back sharply post President Trump's announcement of a ceasefire between Iran and Israel after we saw major spikes, but they're still not at the level seen earlier this month. Jnana Jegarajah is co-founder, CEO at Comtrends, and joins us now to talk more about oil. And very good morning to you, sir, and thank you for joining us today. If we can first get your take on the oil reaction, of course, in response to this supposed ceasefire that President Trump says will start at 12 o'clock. That should be just in less than 1 hour from now. We are still waiting on Iran to confirm that, but your take on oil price moves.
Well, I think the markets have been relieved by this, news from Trump. And I guess, the way markets have been worried about the Hormuz Straits blockade, that has more or less waned at this point in time. And clearly you can see the way the indices are reacting to the news. Basically 20% of oil, flows through Hormuz Straits. So a threat of, I wouldn't say closure because, Iran can't afford to close Hormuz Straits, but they can definitely create issues for shipping and supplies from there. So that in turn is going to escalate to, higher freight costs, higher inflation, higher interest rates, and so on. So it's a huge relief what we're seeing today. But the nature of this announcement is that it needs to come from Iran as well. So that we haven't seen concretely. And, that is something which I would be very, very closely watching because, that's the uncertainty at this point in time. But coming off from the peaks, I think it has brought in some, much needed relief, both, for consumers as well as producers.
Now, we were watching very closely at this time yesterday what the response would be from Iran following the U.S. strikes on its nuclear sites. Iran, in a very measured reaction, using the exact same number of missiles that bunker busters that the U.S. did on its nuclear sites. And it did not close off Hormuz as many had been anticipating. In terms of potential next moves coming through from Iran, what are some of those moves and what are you telegraphing?
Well, I think, knowing well, they've been in a war for a while with Israel, depletion of their, missile capabilities. They would prefer to, I think they would prefer to go with the ceasefire and then regroup themselves. But having said that, a country with, which has been in sanctions for so many years, I don't think, they would get into a full-blown conflict with the U.S. or even continue with Israel for some time. So my sense is, this is not going to sustain and last for some time, but there will be political posturing. There will be blockade threats to Hormuz because, that's one thing I think Iran thinks has in its weaponry more than the weapons itself. So that I think is one of the biggest threats which are still alive, where, they could potentially cause quite a bit of problem for supplies from Middle East. But keep in mind that, Iran's supplies itself will be affected. So, there will also be a sort of limit to what they will do to, as far as the blockade is concerned.
Now, we know that India is highly dependent on oil imports. 90% of its oil is imported, in fact. And we've heard from the government, the oil minister or the gas minister, Hardeep Singh Puri. We got a chance to hear from him. If we can both listen in, and then we'll talk on the back of it, please.
We had diversified the sources of supply. And out of the 5.5 million barrels of crude oil that India consumes daily, about 1.5 and 2 million only come through the Straits of Hormuz. We import roughly 4 million barrels through other routes, And our companies, the oil marketing companies, have enough stocks. Most of them have stocks up to 3 weeks. One of them has, in fact, 25 days stocks. And we are also confident that we can increase the supply of crude through other routes, should the situation so warrant.
The gas minister was speaking there on a Sunday about the diversification of their oil import routes. As we talk about India, share with us how exposed India is to oil prices, to the conflict. Now that they're diversified, their exposure, of course, also increasing over in Russia.
Absolutely. I think the detachment is very clear from any conflict that arises in the Middle East. In fact, India has been building reserves to some extent, I must say, and that was also helping. But if you look at specifically the escalation in the Middle East and what it can do to India, honestly is not much, because it's roughly around 2 million barrels, and it can be easily supported from other sources, like the minister very clearly said. India buys quite a bit from West Africa, even the US, and certain Latin American countries as well. But these could be a little costlier due to higher freight and stuff like that. But as we all know, this is a temporary situation. It's not something which will sustain and last. So I guess the impact on India as far as this particular situation in the Middle East is going to have a very, very minimal impact. And I completely agree with the minister on this.
If it's going to have a minimal impact as we track the developments over in the Middle East, I've been comparing it to the impact from the trade war brought on by President Trump. How would you rate the two on oil?
Already, we are suffering the consequences of growth thanks to the trade war and the tariff situation. And on top of that, you have an escalation of the sort is certainly going to weigh on market sentiment. But, every time we've had similar news flows that impact the economy, it's only become more resilient. If I look at the stock market as an indicator, the Indian stock markets, every time it sees a correction of something like 5% or so, it bounces back with a vengeance. That clearly shows the underlying growth story that India still is running. And, compared to other markets in other countries, I think the potential that it clearly shows, despite the geopolitical risks, despite the economic risk, is very, very convincing as far as overseas investors and Indian investors are concerned. So to me, yes, these are potential risks, but the underlying trend as far as India is concerned is clearly on the long side.
Is India going to remain import dependent, or is domestic production also something that they're going to be making any progress in?
There has been progress. We keep hearing discoveries, but none that has come online or come in to meet the demand expectations so far. I'm sure in the longer term it's going to play a big role. But what we are seeing is that the typical sources that India is quite dependent on is being diversified into baskets to different countries, so that the risk is sort of diversified. So that's a very interesting situation, because earlier it was largely Middle East due to the logistical concerns. Now India even buys oil from the US if it deems fit as far as the price is concerned. So it's a very price sensitive country with the kind of population that you're looking at. So that's one of the reasons why Russian oil keeps flowing, because it does come at a bit of a discount. So I guess till the domestic production comes online to meet the requirements, this kind of risk diversification is going to keep taking place in India.
For India to access Iranian oil as well as Russian oil, there is also the factor of sanctions. Are they still going to be able to increase imports with the sanctions?
I guess not post Trump, coming into the fore, because India will be careful not to, rub him on the wrong side, because they'll be very closely watching, how much of oil that India will be buying from these sanctioned countries, and that will affect the trade agreements that India is currently going through. So I guess it will gradually keep coming down to some extent, but I don't think that window will be closed yet, because times like this, when there is escalation and when we need alternative supplies, you cannot cut out that option completely. So my guess is the volumes will certainly come down over time, and the U.S. Government will certainly keep a very close watch, and with the trade deal in the offing, that's going to be on the decline.
You mentioned the trade deal, and we are looking to July the 9th, of course. That is the 90-day grace period, and potentially a deal between the U.S. and India. Still no clarity there, but do you think that oil could be part of that trade deal?
Certainly do, because if you look at the products that India could be interested in, are the farm products and energy, and of course the defense. So there is a very clear possibility of India able to import from the US, but at the same time, let's keep in mind the freight costs and the logistics of getting into India is a bit tough and difficult. So that would form a minor part of the trade deal, is my sense.
Before we let you go, I just want to take a step back. And in OPEC's monthly report, it did not mention the Israel-Iran conflict. Of course, it's been 12 days now. So we've been, of course, tracking very closely here all the developments. Global oil demand growth remains unchanged for OPEC, both in 2025 and 2026. Do you expect that to change given the events of the last 2 weeks?
I think if the escalation doesn't continue and this de-escalation happens, gradually, there will be this clear pressure for the Fed to start cutting rates. And that should prop up growth to a great extent, and not just Fed. I think across countries, central banks would start cutting rates, because growth is a very, very key factor at this point in time, and many realize that, and inflation will take a backseat for the moment. So I guess that's where we are clearly headed. But I'm seeing definitely possibilities of growth ahead as things settle. But one big risk of tariffs and trade wars still persist, and I guess that's the next big problem that we need to overcome.
Oil is for India, it's the #3 oil importer. I want to ask you about oil demand in India. Given the heat wave, given the infrastructure build out, is there going to be greater demand coming through from the country?
Absolutely. I think it's like I said, we're looking at 7 to 8% kind of a growth story as a nation. Clearly, the infrastructure, spending and all that is going to result in huge energy demand. And at this point in time, I don't think India has the ability to manage it through domestic supplies. So it has to come through overseas imports, and the import bill is certainly on the rise. But the good part is the energy prices continue to go down. That would help a lot in terms of budgeting, and also the currency, which would tend to appreciate a bit, because the biggest import bill is essentially on the USD INR and the crude oil prices.
Nyanya Shekhar, thank you very much for joining us today. We've been speaking with Nyanya Shekhar Jegarajah from Comms Trend on oil. Meantime, airlines in India are seeing the impact of conflict in the Middle East. Air India is ceasing all of its operations in the Middle East. Its operations in Europe and the east coast of North America have also been affected. This comes at a time where the airline is facing increased scrutiny following the crash of its Boeing 787 jet on June the 12th. The country's aviation regulator will also be starting an annual audit of the carrier. Meanwhile, Indigo, India's largest domestic airline, is also flagging disruptions in flights to and from the Middle East. It comes on top of the closure of Pakistan's airspace for Indian aircraft. And staying in the aviation sector, Adani is marching ahead with its plans to list its aviation business, Adani Airport Holdings. Its subsidiary, Mumbai International Airport, securing a $750 million investment from an Apollo-led investment group. The funds will be used to refinance existing debt. And time now for a short break. Coming up, we will focus on the theme of diversification of energy sources and track Japan's recent LNG push. Are there lessons for countries like India? We'll be back to discuss. Japanese energy firm JERA signing an LNG agreement with Australia's Woodside. Lin joins us with more on the story. Lin, why is this an important pact for Japan?
Well, this pact, along with a number of others that Japan's buyers have signed with LNG producers both in the US as well in the Middle East, is a pattern that we've been observing, and certainly one of the key signals when it comes to a country like Japan, which is not energy self-sufficient, so very much reliant on those imports when it comes to energy security. And as we continue to track the developments coming out of the Middle East, the conflict there certainly underscoring the importance for countries like Japan, but many countries in the broader Asia-Pacific region that are reliant on external sources when it comes to their oil and LNG needs. Now, one of the key impetus or catalysts here is the revised energy policy, which came out in Japan in February of this year. It set out a couple of things, but it certainly made a statement when it came to where LNG sits in terms of the broader mix here, that even beyond 2050, which is Japan's goal in terms of net carbon neutrality, that they see a place there for LNG. And that was a signal for many of the buyers, the private sector in Japan, to enter into some of these contracts. And we've got a list of them that we can show our viewers as well. But you can certainly draw comparisons to the situation in Japan with the situation in India as well. I mean, the situation's not as dire. Of course, we've been talking about India's needs for oil imports, virtually 90% coming from imports. When we look at the LNG picture, it's about 50-50 or so, and a lot of that comes from the Gulf states as well. And I think that brings in the conversation that we've been talking about in terms of the United States and buying more there and using that as, you know, piece of that puzzle when it comes to the trade talks, which are ongoing as well, to try and even out the trade imbalance. And that's very similar to the Japan story as well, and also Australia, given that it's closer. So we're talking about cheaper logistics and more favourable tax treatment as well because of the trade agreement that exists between India and Australia.
Lin there on LNG in Japan. Before we head to break, looking at Asian markets, we are tracking strength as the de-escalation in the Middle East are bringing some confidence and risk on back into the market. The standout is the Korean Kospi, better for 2.8%. We also have the Japanese markets, and the TAIEX also traded better for 1%. Coming up, India is racing to ink trade pacts with multiple countries and trading blocs. We will track updates in some of those negotiations. Stay tuned to Inside India. Welcome back to Inside India. Let's head to Tianjin in China, where the World Economic Forum, or Summer Davos, has kicked off. Sherry Kang and Elaine Yu are leading our coverage on the ground there. Sherry, tell us what's on WEF's agenda this time. We hear multilateralism is the buzzword.
That's right. And of course, geopolitical premium, what to do with that, right? I mean, the market, I hear, is pricing in a scenario of peace. But what's going on with Iran, and can we really trust this ceasefire? And of course, is this something that could go on forever? And what's going on between the U.S. and China, the trade uncertainty? Even if we get an agreement, what does that mean, really? So I think the geopolitical lens, the geopolitical conversation definitely trumping a lot of agenda at the Summer Davos in Tianjin, China this year. But yes, as you point out, Elaine is joining us, of course, in this coverage. And Elaine, I do want to talk about how we were just so hypersensitive about what's going on in terms of a geopolitical picture and who's meeting who and why are they meeting? Are they making new friends? What are they trying to balance out? I think that is really the main question that we've been asking this year. And yeah, we're here at the World Economic Forum in Tianjin, but over in Shanghai, there is a Shanghai Cooperation Organization defense ministers meeting as well. And we're watching what kind of conversation India and China will be having as well. I mean, what is your takeaway? What are your observations so far?
Hey, Sherry, I think it is this very sensitivity that has made the two sides want to come together and talk, because you have ongoing wars in the world. There is conflict that is threatening to escalate. Now, we'll see how fragile or how strong that ceasefire really can be. But I think with heightened sensitivities, people are realizing they need to talk. And also for China, it has taken on this role calling for multilateralism and, of course, still supporting Iran to an extent, but still in a complex balancing act.
Yeah.
And now with Pakistan in the mix too, because China did join hands with Russia and Pakistan to call for a ceasefire for Iran and Israel. So I think they are also, India is also recognizing that China does have that influence on Pakistan, is now hoping to harp on the multilateral talk that China has been talking up.
And since you bring in the Pakistan angle, I think there have been some reports suggesting that China has been supplying weapons to Pakistan as well. And I think that is one layer of this conversation as well. I think the recent India-Pakistan border conflict, I think that is something that India could be mindful of, and maybe something that Beijing wants to manage as well. But, of course, many have been pointing out in the bigger picture that India is sort of the key variable in trying to figure out what happens in this rivalry between the U.S. and China. And maybe Beijing wanted to meet with India's defense ministers to sort of counter that coziness that we're starting to pick up between U.S. and India as well.
It is a really interesting sort of global reconfiguration that has been started by the U.S. or the Trump administration's tariff negotiations around the world, and that has very quickly led to global realignment. So we'll see how China and India come together for talks. Of course, India is managing both being next to China and also maintaining those good relations with the U.S., but it is changing very fast, and I feel like countries do have to consider how do they manage all these bilateral relations at the same time.
Exactly. I mean, that is actually one go-to question to be asking all our guests at Summer Davos this year. How do you see this reconfiguration happening? Not just in supply chains, not just in, manufacturing, but of course that is a big picture, but how the defense supply chain is sort of being shaped up in a different manner as well. And when it comes to India, for example, they're mostly going for their own sort of homegrown weaponry programs. But in recent months, they've been sort of cozying up with the United States because it's been very expensive to develop everything on their own. So they sort of need partnerships, and that could be U.S. companies. And then China is going, hold on, we've got defense technology. We've been modernizing our military as well. So perhaps that is something that could happen, sort of this future realignment between China and India. Do you think I'm stretching it a little too far?
I mean, I think both China and the U.S. has been providing material support and sometimes even
pretty much to the world.
Yeah. Things that can contribute to the military or even fighter jets in the India-Pakistan conflict earlier, right? So you do see both powers sort of backing, but I think both sides will be wary of engaging in proxy war. So the key thing is just, I guess, countries want to make sure they're not escalating things out of control, but we'll have to watch for all of those missteps and measures to control that.
Yeah. And for countries around the world and companies, like it's about who do I choose as my friend? Like friend number 2, number 1, or both, all of the above, but is the other friend okay with my decision? So I think that's what it is. But of course, the conversation continues, not just about military and defense cooperation. And I'm actually looking forward to the panel that is happening later this afternoon as well on the topic of manufacturing in a fragmented world. I think the title itself, it just really tells it all, the reality that we live in 2025. Fragmentation and where to manufacture things, the new and old regime. We're going to be talking about that as well. But Emily, it's back to you for now.
Sherry Kang, thank you very much. We look forward to hearing from you about your big panel. Of course, reporting Elaine Yu as well from the annual meeting of the new champions in Tianjin. And we will be also tracking the SCO defense ministers meeting this week. In the meantime, lots happening on the trade front from India's perspective. First up, the country is still chasing an interim trade deal with the United States before the July 9 tariff deadline. An Indian delegation will be heading to Washington soon. This comes amid reports of India prioritizing its national interests in negotiations, resisting U.S. demands of opening its markets for agriculture imports. Trade talks with the ASEAN bloc also in focus. India's Trade Minister Piyush Goyal saying the two sides have failed to reach an agreement for better terms despite 9 rounds of talks since 2022. India and ASEAN are reviewing their current free trade agreement. New Delhi's trade deficit with the 10-nation bloc has been rising in the last few years. But positive signs for India from trade negotiations with the European Union. The two sides are eyeing a full agreement by the end of this year. The EU is looking for a better auto tariff deal than what India has offered to the United Kingdom. A quick check again on the energy patch as we watch this de-escalation over in the Middle East. We are tracking WTI crude down almost 3% now, 66.50. Brent also slipping by close to 3% at 69.44. Gold prices are looking like this. We're tracking spot gold at 3,357. We're also counting down to the market opening in India, and this is how we're shaping up. We're tracking Gift Nifty futures stronger by 0.8%, 25,179 for the Nifty 50, stronger on the session. Let's get to Adrian Zerker. He is co-head of Global Asset Allocation and co-head of Global Investment Management APAC at UBS Global Wealth Management and joins me around the set. Adrian, good morning and thank you for joining us today. First, your reaction to what we're seeing in the markets here. It is risk on following the de-escalation over in the Middle East. Of course, President Trump says that there is a ceasefire, and if that's the case, it'll take place in the next 22 minutes or so at midday 12 or midnight U.S. time. What do you make of this this tempering down or the risk on that we're seeing in the markets?
Well, it seems like the attack from Iran was basically tolerated by the U.S. immediately afterwards, ceasefire. And the transmission mechanism is really about markets and linked to the oil price. And we have seen oil price collapsing. Literally, it's trading around 66, I think, Brent. And that's a positive. So there's a very deep negative correlation between oil price and equity markets. And we see a rally, and I think it's a relief for the markets, relief for inflation expectations as well. It opens up probably discussion again on rate cuts globally, and so by and large, it's a positive outcome.
Any pockets of that you'd be looking at? Is this a good opportunity to get in?
I do think particularly those markets that may be a bit more exposed to oil and have been suffered particularly over the last couple of days and weeks as oil prices actually have climbed up. India is one of them. Europe is a large importer. China is a large importer. Japan is a large importer. And these are the markets that probably benefit most out of that.
Let's talk more about India. And as we were discussing earlier, I was talking about the various trade negotiations that have been going on. U.S.-India comes to front because July 9th is the deadline. 26% tariffs at risk here. India has pushed back on the low-duty imports of agricultural products like maize or like soybeans. You know, where do things stand? And does India have, I want to say, the upper hand or have what it takes to see things through?
Well, it's still difficult to say. I mean, the US is negotiating with literally almost all major countries on a trade deal. Very little has come through. India is probably one of the markets where there's a strategic relationship as well, where hopefully they actually find a deal on that. It means agriculture and probably some tech goods that are coming out of the US, which are particularly in focus. But there's definitely, I would say, a closer part to make a deal with India, Japan. So these are really strategic partners, and I believe that India can benefit out of that, in particular the close relationship they have with the US.
Of course, when we look at the trade war, U.S.-China also comes to mind, and the thaw that we're seeing there, does it come at all at the expense of India?
Well, we have seen Indian market actually lagging global emerging market over the last 12 months, and it was definitely a bit of a repositioning after a very strong performance. But I think there are a couple of aspects towards that. The central bank has been pretty much on hold, but now started to basically cut interest rates. We have seen inflation coming off. I think that all bodes well for India. I said we probably potentially have a trade deal, and I believe we're probably closer in India and the US trade deal as with some of the other trade deals. So there's probably a lot of positive momentum that could come through. And we also have seen that the whole Chinese equity market have stalled a little bit. The trade negotiations, also they're still uncertain what exactly happens eventually. And there's probably a risk that new tariffs are coming up on the US and China relationship. And therefore, I do think, in our view, India is an attractive market. We have an overweight there. And it's probably one of the market that, until the year end, that can do very well.
India-China is also a relationship that we are watching. India is viewed as an important player in China's efforts to woo the global south. It's complicated, though, if the U.S. trade deal includes language that's directed at China in the Indian trade negotiation. Do you think that's going to be impacting the China-India bilateral relationship?
Well, as we know, the relationship has been always a bit complicated, but these are the two largest markets by far in Asia, and eventually they would actually benefit if they find sort of a positive relationship which they can work on. Definitely the US tries to play both sides, and we also know that, for example, India has a large current account deficit with the rest of Asia, while it has a very large surplus with the US, and therefore I think that negotiation will still be very much in focus. And we know that probably some of the business that are currently in China will transit to India, and I think the US will play a major role out of that.
We're also watching the India-EU trade deal, and it's expected to come, some fruition by the end of the year. CNBC's TV18, Parikshit Luthra spoke to EU's ambassador to India, Hervé Delphine. Here's what he had to say about the negotiations. And of course, Adrian, let's talk on the back of this.
Both sides are definitely committed to get the deal done and by the end of the year. And I think that's what the leaders have instructed both negotiating teams to deliver, and not just by the end of the year, but also a meaningful FTA. I think there is a sort of simply a scale effect that the EU economy is way larger than the UK, and that scale element should be reflected in the final agreement when it comes to the size of the quota.
So India is trying to pursue a trade link by sea and rail with that of the EU. And the EU presidency will be taken up by Cyprus in a couple months' time or at the end of the year. Do you think that their shared membership in the Commonwealth will be beneficial to the trade relation and the trade negotiations between EU and India?
It definitely can have a positive aspect. I think we should not forget India. Probably another 200 million over the next 5 years will enter sort of the middle income class. So Europe has a very big interest, of course, on finding a trade deal. I think it's now the 7th round. Both sides are indicating they should find a solution towards the end of the year. And that could be positive for both, particularly, as we know, the car industry in Europe is one of a big topic in this trade deal. But then, of course, also on the other side, Europe has a big relationship with India and is a big import market of Indian goods as well, and probably going forward even more. And I think so that's a mutual benefit out of that. And it's maybe something which is less complex than US relationship and ASEAN relationship. So it's something where India actually can make a lot of progress. And we can basically say both could be a winner out of this trade deal.
Where does India stand in terms of manufacturing and production? Of course, we've seen the United States kind of drive protectionism. Then there's China Plus One, and companies are starting to produce over in India. And then we hear from President Trump saying that, threatening Apple, if you don't make your iPhones in the United States, then we're going to charge you more tariffs. So where does India stand in the manufacturing landscape, especially against China?
Well, it's still probably quite at the beginning of the stage, particularly versus China. But there's a lot of money flowing. And I was just been in India recently, an investor trip. 70% of overseas investors that are joining the trip have been the first time in India. I think there's a big interest. We see a lot of optimism about entrepreneurs in India on the tech side, but I think now they're also moving into the manufacturing side, particularly becoming more automized, robotics, which plays a major role, and be more efficient, and productivity actually can increase. So India definitely has a large pool of laborers, and I think that could be exploited, in particular if technology can be an advantage on basically bringing more manufacturing to India. And therefore, I do think there's a big opportunity for India to step in. We know we want to diversify supply chains and moving away from China and also from other ASEAN regions. So India definitely has a big part to play in this game.
Is there any industries in particular that we should be looking out for?
I would say technology. That's probably the aspect where India anyway has a very strong relationship. There's a lot of innovations coming from there. And I think that could be further developed. And as I said, then the manufacturing also bring into the onshore business. And I think that would be the natural step.
I know that Han High Precision was working to build semiconductors out over in India. I want to ask if you've been keeping an eye out on the RBI, because, of course, yesterday we were looking at whether or not it would cross 87. The rupee has fallen to that near key level potential of intervention. In terms of the weakness and any potential intervention by the central bank, where do you see the RBI trading?
Well, I mean, they delivered and front-loaded the interest rate cuts, 50 basis points. We probably think they're done until the end of the year, despite inflation is now basically on a 5-year or even 6-year low. We dropped below 3 in terms of inflation, and food inflation is at 1, which is definitely one of the key aspects where the RBA is always concerned on. The currency side is also a reflection of we have seen risk off, and I think now probably see a risk on. So the US dollar tends to weaken. We still have a very weak view on the US dollar. We think it's an overvalued currency. Fundamentals are not very strong. Some of the geopolitical risk have probably come off, and therefore we actually do think that the dollar should weaken. The Indian rupee looks a very interesting currency, and now after the oil drop, there's probably more support. But yes, the RBI will probably intervene. But at the same time, they don't mind too much of a weak currency because it also helps them in terms of export activity. So there's probably a very, I would say, soft intervention that will actually be applied.
What about the outlook for the Indian market?
So we think it's an attractive market. It has underperformed the last 12 months. Earnings growth is coming through. It's high single digit, if not double digit even. We do think that the interest rate cuts will help the business. The low inflation environment is a positive one, and if growth should not really come through as strong as expected, the RBA could do more. We don't expect that. So there's a lot of positive aspects that are speaking for India. Some of the trade deal that could be announced, if it's with the US, Europe, or some breakthrough on the ASEAN side, all that could actually bode well. People are still positioned but I think it's not as extreme as we have seen for a year ago, for example, and therefore there's room basically for EM allocators to actually increase India. So it's definitely one of the key markets currently in our view.
Before we let you go, do give us your key investment idea.
Oh, globally, I'm very, very confident that interest rates are too high. Central banks will have to cut. I think growth is coming off. Now the risk of oil price has also receded. I actually do think being long duration is one of the key aspects. And then we still short dollar in our portfolios. We think the dollar has further to weaken. We see from structural shifts, but also on a tactical side, fundamentals are not very good. The Fed will have to cut interest rates. We think it's at least 2 times this year. And therefore, we actually do think that that's one of the key trades we currently have in the portfolio.
We're going to be watching out for Fed speak this week from Jay Powell as well for the next 2 days. Thank you very much, Adrian Zerker, for talking through the markets and, of course, the Indian trade deals. Adrian Zerker from UBS Global Wealth Management. Indian markets have joined the trading day, and we will look at some of the market-moving stories on the other side of this break. We'll be right back. Indian markets are coming online, and we are tracking the Nifty 50 higher by 1%, 25,230, following many of the markets around Asia on a stronger session with the de-escalation from the Middle East. The Indian rupee at 86.10 against the U.S. dollar. A quick look at oil companies traded in India. And it's a little bit mixed. We have ONGC down 2.3%. Oil India also weaker on the session by 3%. We've got the likes of Bharat Petroleum at 323.70 and Hind Petroleum at 410.20. Meantime, Tata Motors has announced introductory prices for its latest all-electric SUV, the Harrier EV, ranging from 2.1 to 2.7 million rupees. Bookings for the vehicle will officially open on July the 2nd. The Harrier EV marks a major step in Tata's growing electric push as the automaker targets launching 30 new electric and internal combustion engine models by 2030. The company continues to strengthen its leadership in India's fast-evolving EV landscape. The IPO market seems to be hitting the pedal again after a halt Walmart-backed payments app firm PhonePe is reportedly planning for a $1.5 billion public offer. Bloomberg is reporting that the company is gearing up to file pre-IPO documents, and they could be filed as early as August. If it goes through, the IPO would value the fintech firm at around $15 billion. And one final check of the Asian markets on this morning. All in the green with the exception of Malaysia. We have the FTSE Bursa KLCI down 0.1%. The leader on the board here is the Korean Kospi, higher by almost 2.8%. The Thailand markets, SET, up 2.4%. The TAIEX stronger on the session at 22,140, and not too shabby for the Hang Seng Index, gaining about 400 points, 24,147 last traded. So it's largely risk-on sentiment today with the de-escalation over the Middle East. President Trump, of course, also announcing that there's been this trade truce or the ceasefire, but we are still waiting on confirmation of that coming through from Iran. If so, it was set to take place at noon, midday, or 12 a.m. U.S. time. So that'll be in the next 4.5 minutes or so. And we're going to be tracking that, of course. Continue to watch the developments in the Middle East. And that's all the time we have on the show today on Inside India. Keep it here on CNBC. Access Middle East, of course, is coming up next.